Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about BioNano Genomics. This was a company that someone on one of my prior streams asked me to take a look at, and so I am taking a look at it. Ticker symbol is BNGO. I'm going to be doing a sort of overview of the company, a fundamental analysis, and give sort of a rough model of what a potential long-term valuation could be for this company. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently do not hold any position in this stock, and I have no positions to initiate one in the near future. But this video should be for your entertainment purposes only, because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So, BioNano Genomics. What is it? This is as you might imagine from the name, they have something to do with genomics, and what they do in particular is something called, I believe it's optical genomics mapping. It's this OGM. Let me see if I can find. Well, it's not that big of a deal, but they make these machines called. They have this machine, the SAFR unit. Hopefully, I'm pronouncing that correctly. I'm not sure. That they use to actually do this. And this is some sort of a new technology to map genomes and find variations in genomes that is used in, I guess, research and potentially has some clinical applications. I'll just state up front here, I have no particular knowledge in this industry, so I don't really understand it that much. I'm just going to be looking through some of the details here as I do understand them, and going into the numbers of the company. But looking at what the company does, right, it's useful to take a look at. And they sell these units, these SAFR systems, and then they also, as part of that, they sell consumables that are used in each sample that goes through the SAFR unit. They have these things that I guess they use to actually put the sample in, and it goes in, and that's where it actually, that's what goes through this particular unit here and comes out and has the results, or at least is used to give the sample to it so they can get the results. And then they also, in addition to selling those consumables, they also sell software that goes along with the unit and helps them manage all the tests and the results there. And then I believe they also sell services, and I'm not 100% sure what all that entails, but I imagine it has something to do with probably providing the software and some maintenance, and then also, I think they might actually process some of these samples for some folks. So that is a rough overview of what the company does. So I'm also going to go real quick into the history of the stock and just a couple high level bits there. So currently the company is trading at a market cap of $629 million, and price about $2.12. And this is the wanted to go to the 5-year chart because it's pretty interesting. Well, here we can zoom out, and you can see this company has been around for a bit, for years. So this is not a recent IPO by any sort, or at least not in the past year or two. But if you look at the 5-year chart, it's super interesting because there's a humongous spike, and that coincided right around the same time that there was a lot of hype in the market. This was when the initial GameStop spike happened, was in late January of 2021. Things were a little bit crazy across the whole market, and BioNano Genomics was one of those companies as well. And I think it reached a peak valuation of somewhere between $2 to $2.5 billion back then. And so you can see, from its peak now, it's down 80% or so, right? Its peak of 13.7 per share, and I don't know that that's exactly the total peak, but let's just call it there. It's down to $2.12 right now. The share count has increased by about 50% since then, but even still, the company is down quite a lot in terms of market cap. So just interesting to note, and you can see over the past year or so they've gone down just the same as most technology and just technology as a whole, including biotech, have been. All right, now so let's get into some of the numbers for the company. First, I'm going to briefly look at the balance sheet, and then I'm going to go into their revenue and profitability. So if we do look at their balance sheet, this is the most recent numbers from Q3 of 2022. The balance sheet actually looks great. So if I ignore kind of what I'm going to go on and talk about their revenue and their expenses. The balance sheet is solid. They have, combined between their cash and their investments, what's that, $180 million sitting around in terms of cash on the books. And they've got some inventory here. And you look down here, there's some intangible assets, probably patents and goodwill, and that's not really worth too much. But if we just go to their tangible assets, right, just their liquid assets, their cash here, $180 million of cash and investments. You look down here at their liabilities, right? Their total liabilities are $42 million. And if you're looking for debt here, there's no debt, right? So no debt, lots of cash on the books. This is fantastic. Pristine balance sheet, as things look here. Some of this is, I think, one thing to note. They did a very, very recent acquisition in the past week or two that I think was $32 million in cash, $64 million overall. So some of this cash probably just recently got spent, but even still, they're not in any danger even from that deal of they're not in debt anytime soon. All right, so let's look at their actual revenue and the profitability. And I put together some of my own charts there so that we can see this over time. Actually, this before we get into the revenue and profitability, I looked at how many of these Sapphire units, these things here, do they actually have installed, sold and installed with customers? Because this is a number that they have been reporting for a while. Let me get back to my chart here, and that is the blue line here. You can see this is a number and it has gone up, and so they started reporting this in about the middle of 2020. You can see it was about 80 or 90 units at the time. They are now up above 200 units installed, and they also at some point started reporting some of these consumables. They call them the flow cells, and then the number of samples that are analyzed in their actual service lab. And you can see that those are both trending upwards here as well over time, even though we don't have quite as much of a history for that data. But you can see clearly the company is growing their installed base here, and the usage of those, or the selling of those consumables, and how much services they actually perform themselves. And you can see this reflected in their revenue. This is a chart. This is stacking up the revenue from, or it's showing the revenue. The total revenue would be the top red line, and then you can see how much of that actually was comprised from product revenue, how much was from service/other revenue. That's what they call it in the reports. And you can see that, in years past, I started collecting the data around the beginning of 2019 in the first quarter there. And you can see at that point, almost all of the revenue is coming from product sales. And I believe product sales means, selling these units here. And you can see over time that they continue to sell products, and that revenue has, it's certainly trended upwards since this low in mid 2020, when the pandemic hit. That's clearly trended up from there. It is actually above the peak in 2019, so it's even higher there, but just barely, right? It's not hasn't continued the same sort of incline, the same straight line, or line going up and to the right over here for the product revenue. But what has is the services revenue. You can see how that has just grown and grown and grown, and originally was almost a rounding error in terms of their total revenue, and whereas now, if you just eyeball it, it's about 50% of their total revenue, and the portion there does seem to be growing. And I might have a chart for that in a second. Yeah, so I have a chart here that actually shows in each quarter what was the percent of revenue that came from products and what was the percent of revenue that came from services. You can see over time this has actually converged to where in the most recent quarter it was about 50-50. And you can see the percent from products is going down, percent from services is just going up over time. And that makes sense, right? Because all of these, if we go back to this chart here and we look at how many of these Sapphire units are actually installed, these are, as far as I understand, pretty expensive units, and units that are going to probably be utilized for years and years and years. And as those units are utilized, they're going to require some of these consumables, right? Some of these flows, either some of those flow cells to be used, and then some of these might also result in some services. And again, I actually don't understand the services all that much, but I have to imagine that the services are going to go up as the number of units installed is going to go up. But certainly the flow cells sold, those are consumables that are used for those tests that the units process. Those are definitely going to go up. So that'll make sense. Now, what is the actual profit margin on those? This is a very, very interesting thing as I was looking at it. And so first, let's look at the gross margin on their products, because they report these numbers separately. They tell you what the costs are from products and the costs are from the services slash other revenue, sort of the offsetting costs there. And so we can compute the gross margins on those. And you can see over time, the gross margins on products were around the 25-30% range, somewhere in there. Bounced around a bit quarter to quarter, but you can see it was there until recently. Now the profit on those has dropped and is actually negative. And you can also look at the profits on the services, and the other stuff is actually is higher than the profit on products, and is staying pretty consistently at or above that 50% gross margins. And this is actually a pretty good thing for the company, in my opinion, in terms of profitability, because you can see that they are, the growing portion of the revenue, the services, is also the more profitable line of business for them to be in. And to me, this kind of looks like they're getting into the whole model that is used for printers and ink, where they're selling the printers at cost or even at a loss here, where you can see that would be the product revenue going negative, in order to build a base that is going to have to then use these consumables, right? And for printers, they sell the printers cheap so that you buy the ink, and they have higher margins on the ink there. And so that's kind of what this looks like to me. And so I looked at the future, when I get onto my long-term valuation sort of rough model, that's how I am seeing the future of this company. And I didn't read anywhere where they explicitly stated this strategy. So I could be misinterpreting things. Maybe some of these numbers will revert back to the mean over time, but it's what it looks like, when I'm interpreting the numbers right now. And yeah, so I actually put this chart together just to show you the gross profit. If I break it down by sourcing, you can really see it here, where at some point their gross margins went negative on products, and you can see that actually was cost them money in gross terms, but then the profits from those services and other actually made up the difference. And you can see where it's just a huge portion in the most recent few quarters here. All right, so talk about gross profit. Let's also look at how that compares to their total operating expenses, and this is pretty ugly. These blue bars here, the tiny little ones, if you can even see it, yeah, it is coming through the video. I hope there. These represent the gross profit on each quarter. The red bars represent the total operating expenses, and this would be R&D and SG&A, and you can see that they are drastically out of balance. You can see their operating expenses are huge compared to their current gross profits. And again, this is a company that is actually, let's just look back at this. They are growing revenue, and so there's lots of companies out there that are currently losing money as they're sort of scaling up. And I think that's the bull thesis for Bionano Genomics. But if you look at it, you can see here that the operating expenses has grown quite a lot, and seems, if you just eyeball the chart, it seems like the operating expenses have been growing maybe even faster than the revenue itself, right? They're clearly it's been growing quite a lot, and they're nowhere close at the current moment. But that's let's go on just for a minute. One of the things I looked at here, because when a company is losing money, I like to look at what is their runway, right? Because as I said earlier on, when I look at the balance sheet, they have a lot of cash. So even though they're losing a lot of money right now because of their operating expenses, relative to their gross profits, they also have a lot of cash, so they can continue funding the company for quite a while, because of that pile of cash that they have. And so I looked on every single quarter historically, how many years of runway did they have for the cash that they had on hand versus what their operating loss was in that quarter. If we assume that the numbers stayed static as of on the income statement for that quarter, and just extrapolated out, how many years of runway do they have with their current cash on hand? And you can see in 2021, I think they sold a fair bit of stock and raised a good chunk of money there, and they've been burning that down now. And at one point, they had a ton of cash on the books relative to their relative to their expenses, and I think the company has scaled up since then and spent down some of that cash. And so you can see that as of right now, they're sitting at about 1.5 years here of operating runway. It's not going to tell me the value. I think it's cut off here. I could probably scroll up and find it and tell you the actual answer, but it's about 1.5 here, and I think that's a useful rule of thumb to 1.4. So that's the actual number here, and that is, I think, a pretty good way to look at things and to sort of reason for yourself in terms of what's going to have to happen in the next 1.4 years. We'll round off to 1.5 and say, do we think they're going to reach profitability in that time, or at least shrink this gap here, by growing revenue or cutting expenses, so that runway would get extended out much further while they do reach profitability. So that's sort of like the high level look at the company and some of the things that jumped out at me. One other interesting point that I have no real further discussion on, but this is one thing I noticed, is that the amount of inventory that they have in terms of how much, the dollar value of that inventory has grown quite a bit, right? So the inventory they have on their balance sheet is the blue line. You can see this is just since, about the middle of 2021, has just gone on a, going up and up and up every single quarter. And this isn't even just a matter of, well, we're growing revenues and, we're moving more product, and so we kind of need a little more product, relative to our sales. I also plotted here the red line that shows the inventory on their balance sheet as a percent of their revenue in that particular quarter. You can see that this is also going up. And so that's, I thought, was pretty interesting. And it raises a question in my mind of, what is it that they're trying to, why are they, sort of building up more and more inventory? Were they unable to sell what they thought they were going to sell? Do they have, for some reason, in anticipation that they're going to be able, that demand is going to pick up quite a lot, and they're going to, need all of these for future sales? I don't know. It's hard to say, but, growing inventory isn't necessarily a bad thing, but it's, definitely something to watch going forward. So that was my rough overview of the recent history of the company. Now I wanted to look at what is a potential long-term valuation. And we have some indications of what the total addressable market would be from the 10K. Let me see, current worldwide. Yeah, so this is in their 10K from the end of 2021. And they give some details here on what their estimates are. And I have no reason to believe that this is, incorrect or wildly wrong. So they estimate that the total market for these Sapphire units for OGM based instruments is about 10,000. And they, of course, they believe, and I have no reason necessarily to doubt them, given the valuation they have in the market. It seems credible. That other people agree. They believe that their units are basically like, the best things out there to be able to do this kind of genomic analysis and imaging. So 10,000 of these units, and they think that the recurring revenue they could derive from each one of the units would be between 70 to 175,000 per year. And they call this out as, hey, this is a potential annual recurring revenue just from the consumable sales of 0.7 to approximately 1.7 billion dollars, of from all those consumables that folks who have 10,000 instruments installed would need to be using on a regular basis. So that is the basis for my potential long-term valuation. And here's how I looked at things here. Is I said, look, as I see the margins, I showed on that chart before, the margins on their products are basically going to zero. It seems like they're selling these at cost so that they can then pull in that this value for the services and the consumables. And so I'd put the gross profit on the product at zero. I computed the services gross profit here, as I said, well, what if we look at, let's say they capture 50% of that market that they're estimating of 10,000 units. So half of that market, and we assume they have 50% margins on those, right? And that's what we saw before from their services and their other stuff. And then we multiply that by, $10,000 of annual revenue per unit for those consumables and the services. And so that would be a gross profit from that stuff of $250 million. So that's like kind of the long-term, potential gross profit that I could see there if they capture 50% of the market, with these assumptions as I just went through. Now, if that's their gross profit, we need to also subtract off their operating expenses to get their net income. And I plugged in here just their operating expenses from Q3 of 2022 multiplied by 4, so it's annualized. And if we assume, for initial sake purposes right now, that they operating expenses stayed flat between now and the time when they actually hit this, $250 million of gross profit. If that was the case, they would, they would actually end up with net income about $114 million. If we gave them, like, let's say a PE ratio at the time of 25, then that would get you to a final valuation of about $2.8 billion. Given that the current valuation is about $620 million, this, maybe today it's slightly higher, 629. Let's call it 630. That would be, a 350% return. Now, what I am worried about when I look at this company is, their operating expenses, go back to that chart, have grown, right? The pace of growth has slowed clearly in the past year. This is much flatter than it was before. This is just going up and up and up, throughout 2021. But it's still going up, and I think it's going to take them quite a while, right? They have 217 units installed right now. It's going to be, I would guess multiple years, maybe a decade, even an optimistic scenario, before they would hit 5,000 units installed, which is what this, gross profit number is based off of. And if in that time they increase their operating expenses, by even 50%, right? So it goes up from the Q3 number is 50% higher than that. So it goes from, $135 million a year to $204 million per year. That wipes out quite a lot of that profit. And so now all of a sudden you're looking at a net income, if they grow expenses only by 50% in multiple years. This is the total growth, not 50% per year. This 50% spread out over the course of multiple years. That would get you to a net income of, $46 million. Again, using the same sort of rough PE ratio of 25, which I think might be generous at that point. Gets you to a $1.1 billion valuation. That's a total return of, 83%, between now and when they would actually hit this point. If their operating expenses grow even more than that, that eats into that net income. And, you're looking at valuations that are even smaller. And, very quickly you get to realize that if their operating expenses grow even more, like, there's no profit left for this company, even with massive growth, already factored in. And so that is my biggest concern with this company. Like, it seems like the technology is good from all the stuff that I, read from an initial look over at some various sources. But it just seems like a lot of future growth is already priced in, given how much it seems to cost them to operate this company. So, because I think, this is maybe even an optimistic number that they would only increase expenses by 50% in order, in the time it takes them to grow this much. And, that even if that optimistic scenario materializes, you're looking at it, an 80%, upside from here. And I think you're taking a lot of risk. A lot of things have to go right for that to happen. So I'm not saying that there's no upside here, just that the operating expenses in this company do worry me quite a bit for what I think is, capturing a good chunk of the total addressable market. And if I were going to, hi Transient Stacker, thanks for hopping on. I'm actually almost done. Sorry, I don't know when you joined. I was deep in discussing all my stuff over here. But I think one of the if I was going to play devil's advocate to the argument that I just made, I would say, they might find more applications for this. Maybe, what they've looked at here when they estimate of, 10,000 units, for, they call it out in terms of like, these are, discovery research applications, molecular genetics. And I don't, again, I don't know enough about it to recognize whether this is actually the total addressable market for what they could do with these units, or if this is only sort of like the current addressable market, and that maybe when they develop procedures or develop, standard medical practice, that, part of that would be getting the sequencing done to check for something, that maybe this would be something where now their total addressable market would 10x, because now, every hospital might need one of these units. I don't know. This is, again, like I do not have enough knowledge in the industry to have, really insight into that. That would be, something that could actually kind of, that could grow the total addressable market, and that could, would be factored into what I think a long-term potential valuation could be, right? So I think that's the potential upside here, if I do look out to the future. And, that plus any other sort of ancillary products that they would come out with because of all of the expertise that they have here and the experience they have operating in this space. Those could be, the bottom line here that I'm getting at is this valuation here is sort of limited, most limited here, I think, by both the operating expenses I talked about, but also the total addressable market. And if something happens to grow that total addressable market, by multiples, then, that potential valuation could grow quite a bit too. And then there you might have, a lot more upside to see in the stock. So that was everything I had to go through for Bionano Genomics. Hopefully that gave you some, insight into the company. I'd be happy if you have any questions to, answer. I know Transient Stacker, you're on the stream right now. If you have anything, I'll hang around just for a minute. Otherwise, I will hop off, and I will be happy to answer anything down in the comments after this video is done. So yeah, like I say, I'm just going to stick around just for a minute. If Transient Stacker or anyone else on the stream, I still haven't figured out how to tell who's on the stream for these things. But if any of y'all have any questions or comments at the moment, otherwise I will hop off. It is a very interesting company, right? Seems like it's on the cutting edge of pushing the boundaries of what we can do with genomics, and it's very interesting. It was very interesting to read through their annual report and sort of see some of the background and their description of the industry and just some of the stuff that they can do here. It's very exciting. I just think right now there's a lot of future growth priced in, given how the current economics are of the company. I guess another thing that the company could do is if they laid off some folks or cut compensation to actually bring down those operating expenses, right? That could be another way that this company could reach a very profitable state, with not nearly as much growth needing to be realized. All right, I am not seeing anything else on the chat, so I'm going to hop off. Thank you, Transient Stacker, for joining and hopping on the stream, and thank you everyone else for watching. Hope you enjoyed it.